Welcome to Bitcoin Mining News Episode 5 for Monday, July 17th, 2023. Be sure you've subscribed and liked this video so you can stay up to date on all things energy and Bitcoin mining related. Let's get to the numbers. Looking at timechaincalendar.com, we can see in the top right-hand corner here that the exchange rate for a whole Bitcoin is 30,359 USD. For $1, you will get yourself 3,294 sats. In the top middle, we see the average block time is 10 minutes and 45 seconds, quite a bit slower than last week. The next difficulty adjustment, with that in mind, is going to be a drop of 6.91%, and the average hash rate for the last 14 days is 383.3 ExaHash. The on-chain transaction fees for a high-priority transaction is 16 sats per VByte, and for any time, it's 8 sats per VByte. Pretty low, but not as low as I've seen in the past couple of weeks there. We are also back over 250,000 unconfirmed transactions, which makes it a depth of around 126 blocks. As we get ever closer to the next halving, which is scheduled for the end of April 2024, I suspect we'll see even more news regarding that monumentous event. This here from Decrypt. Bitcoin miners face stress test in next halving, JP Morgan. The price of Bitcoin and transaction fees will need to rise significantly to offset the lower block reward. Bitcoin miners will face headwinds as the hash rate reaches new record highs ahead of the upcoming halving event next spring, with volatile electricity costs and competition among miners pushing up the cost of production, according to analysts at global financial giant JP Morgan. Hash rate refers to the computational power used to mine a cryptocurrency. The halving event, which occurs roughly every 4 years, will reduce miners' rewards by half. Right now, when a miner finds a block, they are rewarded 6.25 Bitcoin. And that means that in a day, roughly 900 Bitcoin are mined. But that will be cut in half at the end of April 2024, from 900 Bitcoin mined a day down to 450. Or, thought of another way, the subsidy will go from the 6.25 to 3.125 per block. According to the analysis, and based on a global average cost of electricity of 5 cents a kilowatt hour, it costs around $20,000 to mine a Bitcoin, which is currently worth $30,000 per CoinGecko. But JP Morgan said the volatility of the hash rate points to the use of a variety of energy sources, meaning miners with access to lower priced power have an advantage. Institutional interest in Bitcoin mining has provided support to struggling miners with investments in mining rigs from companies like Galaxy Digital and Grayscale Investments, it observed. Galaxy Digital recently acquired Argo blockchain, and Grayscale spun off an entity focused on Bitcoin mining hardware. And speaking of companies spinning off and doing things in the mining space, I'm curious to see what happens with this. This is back from March 7th, 2023, but Jack Dorsey's blog reveals plans for Bitcoin mining development kit. Apparently, he's been talking about things like space heaters and getting mining into more people's homes to keep it decentralized. So that'll be quite interesting to see how that develops. Back to that Decrypt article. Going forward, it seems unlikely that the Bitcoin hash rate will continue to rise at the same pace post the April/May 2024 halving event, without any sustained rise in the Bitcoin price above its production cost, or a large increase in transaction fees that could offset the reduction in issuance rewards, JP Morgan concluded. Now we'll move over to Cointelegraph to talk about CleanSpark's Bitcoin mining capacity hitting 8 ExaHash. CleanSpark's Bitcoin mining capacity hits 8 ExaHash as new facility goes live. The Bitcoin mining company kicked off the second phase of its mining campus in Georgia, gearing up for the next Bitcoin halving. Bitcoin miner CleanSpark has begun the second phase of operations at its mining campus in Washington, a city in the U.S. state of Georgia, reaching 8 ExaHash per second, halfway to its year-end target of 16 ExaHash. Today, it's 50 megawatts of new power added on the 36 megawatts we previously had constructed there. So, there's 86 megawatts, or 12 times the load provided by the city. said Matthew Schultz, CleanSpark's executive chairman, during an investors' conference on July 13th. CleanSpark has pushed an aggressive expansion plan despite the current bear market. Last month, it purchased Bitcoin mining facilities in Dalton, also in Georgia. The campus will house 6,000 Antminer S19 XPSs and S19J Pro Plus S's, which are expected to add about 1 ExaHash to its hash rate. Georgia has been a terrific opportunity for us because it's predominantly nuclear power, and Georgia is a net exporter of power, said the chairman. And here we have a chart of CleanSpark's hash rate growth in just 2022. They started out at 1.9 in January, midway through in June they were at 2.5, and then in December they ended the year at 6 ExaHash. With the next Bitcoin halving just around the corner, the company updated its strategy once again. If you've looked at our updates, we've started to increase the amount of Bitcoin that we hold back because we believe running into this halving event just reaps rewards and pays dividends, said Schultz. And here we've got a bit of news from Seeking Alpha regarding Metin Holding. Metin Holding shares rise on purchase of 200 Bitcoin mining machines. Metin Holding, NASDAQ METX, will buy 200 units of Antminer S19J Pro 110 terahash per second Bitcoin mining machines from 2 unaffiliated third parties, the company said Friday. Shares of the company rose 19.2% at 26 cents pre-market. The company has agreed to issue sellers ordinary shares of the company worth $880,000 for the mining machines. The machines are expected to be delivered and put into operation by July 31st, 2023. With the latest purchase, the company will have 1,954 Bitcoin mining machines with a computing power of more than 208 petahashes per second. On Friday, I talked a bit about Vanguard's recent nearly $600 million purchase into the mining space, but this article here from Blockworks says that it might not be quite what it looked like. Vanguard's $600 million investment in Bitcoin miners isn't what you think. Now, before you think anything, I'll tell you, there is some signal amid this noise, so we'll get through the noise and I'll tell you what the signal is. Aniket Ulul, head of ETF research at CFRA Research, said it would be incorrect to equate the large holdings in individual companies to strategic investments made by private equity or venture capital firms. I can't speak to Vanguard's motivation for its investment in Riot, but their position was procured in the market and not by way of any company-facilitated offering, Riot CEO Jason Luss told Blockworks. Ownership via index funds. Some may see Vanguard's 10% plus ownership in Riot and Marathon as being bullish on such firms, or the crypto space more broadly, though the company has previously made clear its hesitancy to enter the space. Ulul noted that fund managers typically invest in publicly listed companies as part of an index tracking mandate. The vast majority of equities managed by Vanguard are in index funds, which do not take a view on any specific stock, a Vanguard spokesperson told Blockworks in an email. Rather, they simply seek to track the performance of the fund's target benchmark. What I hear there is that these large companies aren't specifically spending the time to research mining per se. They're just going, hey, this company, whatever it is making a lot of money. We're in the business of making a lot of money. Let's invest in that. While financial giants such as BlackRock and Fidelity have expressed interest in wading deeper into the crypto space, Vanguard has not expressed any plans to do so. And that ties back to what I was just saying. Vanguard, specifically, just Vanguard, might not be looking at crypto mining as something that they really want to get into, but they are certainly looking into how to make more money. And if the incentives are over here and happen to be in Bitcoin mining, then so be it. That's what they're going to get into. And to me, this is all bullish. If these large institutions, your BlackRocks, your Fidelities, your Vanguards, are getting into the space for whatever reason, and that's kind of irrelevant, then there's more money getting into it. And as retail investors are connected to these larger institutions through retirement funds, pensions, etc., then that just means more money is going to be coming into Bitcoin. So, to me, it doesn't really matter why somebody is getting into Bitcoin, at least initially. I'd like to see them interested in its socioeconomic properties and why it's a better money for the world. But regardless of that, that can come later. People are coming to Bitcoin, and the institutions are leading the charge on that. It'll be very interesting to see what happens as we get ever closer to the halving. And if you're interested in even more information, check out the Mining Disrupt Conference. You can find out more by hitting this QR code right down here. That's taking place in Miami, Florida, July 25th through the 27th. Until next time.